Every single day, thousands of Union Pacific trains are crisscrossing the country. They're carrying pretty much everything that powers our lives. So their performance, it's not just about one company. It's really a real-time indicator of the health of the entire US economy. So today, we're going to dive in and unpack their latest quarterly results to see what story they're telling us. So what's the short answer? Well, they're doing exceptionally well. But the real story, the interesting part, is in the details. How they're pulling off these record results, and what this massive potential merger could mean for the future of freight in America. Let's get into the engine room and see how they're making it all happen. All right, so here's what we've got on tap. We'll start with the big headline, their record-setting quarter. Then we'll decode the key financial numbers. After that, we'll see how they're running a more efficient railroad, talk about that monumental merger on the horizon, and finally, we'll take a look at what they see coming down the tracks. Okay, let's get right to it. The third quarter of 2025 wasn't just a good one for Union Pacific. It was really a proof point that their whole strategy is clicking into high gear, delivering some of their best results ever. And you can just feel the confidence in this quote from the CEO, Jim Vena. See, it's not just about the great numbers. It's the fact that they see these results as confirmation that their long-term plan is working exactly like they drew it up. That kind of confidence is really the foundation for the record-breaking numbers we're about to get into. All right, it's time to follow the money. To really get a sense of the scale of the success, we have to look at the core financial metrics. These are the numbers that tell the story of the quarter in black and white. First up, the top line. Total operating revenue hit a cool $6.2 billion. That's a solid 3% increase over the same time last year, and it was driven by strong pricing and moving more high-value goods. Now, after you account for all the expenses, fuel, salaries, maintenance, the whole shebang, the net income, the pure profit, landed at a massive $1.8 billion. And that's the real story here. It's not just about earning more, it's about being really good at converting that revenue into actual profit. And for investors, this is the number that really gets their attention. Adjusted earnings per share, which is basically the slice of total profit that goes to a single share of stock, it jumped by 12%. Wow. That kind of double-digit growth is a powerful signal of a company's financial health. Putting it all side by side like this, it just tells a really clear story of growth. You can see positive momentum across the board compared to last year, from revenue all the way down to earnings per share. Every single key metric is headed in the right direction. But to really get the how behind these numbers, we need to talk about one of the most important metrics in the railroad industry, the operating ratio. The easiest way to think about it is like a golf score. It measures your expenses as a percentage of your revenue, so the lower the number, the better you're doing. It's the ultimate measure of efficiency. And here's where that metric just comes to life. Union Pacific managed to drive their adjusted operating ratio down from 60.3% to 58.5%. Now, that drop of 1.8 points, it might not sound like a lot, but in an industry with these colossal fixed costs, we're talking tracks and trains, it's a massive deal. It means for every single dollar they earned, they spent almost 2 cents less to make it happen. That's pure efficiency gain dropping straight to the bottom line. So, we've seen the impressive financial results. But how in the world did they do it? Well, the answer lies in running a faster, smarter railroad. This is the operational story behind all those dollars and cents. So what is Union Pacific actually moving on these trains? Their business is pretty diversified across a mix of industrial products. Think chemicals and plastics, bulk commodities like coal and grain, and then premium goods, which includes cars and all those intermodal shipping containers. Having this balance really helps them weather any shifts in a single part of the economy. Okay, now here is a fantastic metric, freight car velocity. This measures how many miles, on average, a single freight car travels per day. They boosted this by a whopping 8%. Faster cars mean happier customers. And maybe even more importantly, it means you can move more goods with the exact same number of assets. That is a huge lever for profitability. And the key takeaway here is that it's not just one thing. It's this combination of factors that are creating a really powerful cycle of efficiency. The trains are moving faster, they're getting longer, we're talking nearly 2 miles long on average, and each locomotive is pulling more weight. That right there is the recipe for record performance. Now, this operational excellence is super impressive on its own, but we really can't talk about Union Pacific's future without discussing the monumental event on the horizon, their proposed merger with Norfolk Southern. This isn't just an acquisition, it's a move that could alter the entire landscape. And this quote from the CEO really puts that ambition into perspective. This is about creating a single, seamless rail network from the Pacific all the way to the Atlantic. Just imagine goods moving from a port in Los Angeles to a factory in Georgia on one single rail line with no handoffs. I mean, it's a move that could fundamentally reshape the entire North American supply chain. Of course, a move of this scale requires immense focus and a whole lot of capital. So to that end, the company has hit pause on buying back its own stock. This is a really clear signal to investors that they are conserving cash and prioritizing all their energy on getting this historic deal across the finish line. So, with a record quarter in the books and a massive merger in the works, where does Union Pacific go from here? Well, let's turn to their official outlook to see what they're telling investors to expect for the rest of the year. Well, it looks like they plan to keep the momentum going. They're targeting continued strong earnings growth, they're investing a hefty $3.4 billion back into the business, and they've already boosted their dividend for shareholders. The clear message here is just one of confidence. They're signaling that they're going to keep executing their core strategy to be the industry leader in efficiency. So Union Pacific is firing on all cylinders, breaking operational records, posting stellar financial results, all while pursuing a merger that could create the first ever American transcontinental railroad. It kind of leaves you with a big question to think about. Are we watching a classic American company building something that's truly unstoppable for the next generation of commerce?